Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, December 9th at about 12 noon Eastern. Well, the dollar gained and stocks on Wall Street edged up a bit today after data on U.S. producer prices in November stirred hope that inflation is moderating, but it also raised fears the Federal Reserve will need to keep interest rates higher for longer. And on that news, let's go on to three charts that could give us some insight into the week to come. First, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that closely follows our S&P 500 index. And we keep an eye on this because many stocks will follow the SPDR up or down. So when I capture this chart today, as you can see right over here, the SPY was trading at $397.12, or about $39.71 on the S&P 500 itself. Now it is trading below its all-time closing high on January 3rd at $477.55. You can't see that on this chart. But it is 17% right now below that high, so we're just above bear market territory. That's a good thing. Now, we've been watching the SPY, as you all know, in relationship to this line right here. The black line is the 200-day moving average. You can see that it is falling and has been since we had that little blip up in March. But for most of the year, the SPY has been trading below this very important indicator. 200-day moving average, especially when it's moving down overhead, can be very positive, powerful. Now, back here a week before this, it managed to pop up to 410, but that up move was very short-lived. And we know, again, that the SPY hasn't been able to trade above this line again for most of the past year. So we do know that it fell to a low in May of 380. The price did. It fell to a June low of 362. Then we know it fell to an October low, gap down here to 348.11. And right now, this is our red line in the sand. Fingers crossed we don't have to watch it too closely, that the SPY does not head down to that. It looks a little more positive than that, certainly at the moment, excuse me, but it does have to rise above this 200-day moving average, which is coming in now at $402.88. Price does need to rise above this line in order to give us a Santa rally and to get a positive end into the year. Now, what do we need? We need more buyers. That's very obvious, and price now has been sitting below this 200-day moving average. Again, just with that quick pop, hasn't had the strength so far to move up and above this line. So we're going to have to see, and it makes you say, well, it's doing a little better here. We do have this support low here at 290. We do have another indicator support here at the green line, the 50-day moving average coming in at $383.35 right now. We definitely want the SPY to stay above this 50-day line. Question is, can it move above and stay above the 200-day rally to give us a 200-day line to give us a Santa rally? So are the lows in for the year? None of us know. It just depends on how many buyers do or don't come into this market. So again, please trade wisely, and remember your primary goal is to protect your capital. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this ETF represents the Nasdaq 100, a major index in the market. And as you all know, the top holdings include Apple, Amazon, Microsoft, Alphabet, Meta, that whole group of stocks. Now we know, and you can't see it again on this screen, that the QQQ made its all-time closing high actually last year on November 19th at $403.99. That was the last all-time closing high. Now today when I captured this chart, you can see right here that the QQQ is coming in at $285.14, has the 20-day moving average just above it, and it is right now trading at 30% below its all-time high, so it is in bear market territory. It has, look at the Qs here, it's been sidestepping along the 50-day moving average here since the first week in November, and now of course we're just passing the first week in December. So, excuse me, for a month here, the QQQ has been consolidating, trading in this little range along the 50-day moving average. Hasn't had the strength to get as close to, it's still at a discount to its 200-day moving average, hasn't been able to get as close to its 200-day as, say, the SPY has, just hasn't been able to do it. Of course, tech stocks get hit hard when interest rates rise. That's just a very simple rule. So we know that we have long-term support on the Qs at about 260. Now back here on October 13th, the Qs dipped down, gapped down to a October low at 255.16. That's been the low so far for the year. Gapped down to that low, then rallied, and that everybody on that day on October 13th, just about everybody gapped down. So it rallied up from there, then made a little bit of a higher low back up here at 260, and again has been trading sideways or consolidating. Now, if you back up and look at this chart, and backing up helps sometimes, you can see that it's potentially, it could be making a double bottom here, which is a bottom trend reversal, which would be awesome. Usually double bottoms, if you get one bottom, then the next bottom has to be at least in line with the prior low, or better yet, a little above that low. So we've got a higher low here. And then it will typically make a handle similar to the one that the Qs are making now. But then the hard part is to finish this double bottom, the Qs have to move up and out. Here's some support here. The Qs have to move up and out over this tiny little double top that's making this handle here. If they can do, or if it can do that, if these tech stocks can get some buyers coming in, and then if the Qs can rally above and stay above the 200-day moving average, again coming in at, call it 304, then we may get a decent rally here, hopefully at least for a little while. We do have the Fed meeting coming up again soon. There's a lot going on. We will have earnings, in the first of the year. But at least for now, if the Qs can get up and over that 200-day, that will be good. So again, trade carefully, and please consider using stops. Hard stops with your broker are the best. Okay, our final chart today is a chart we haven't looked at in a long time. It's a daily chart of the Artificial Intelligence and Technology ETF, the AIQ. It has 85 holdings, including Netflix, IBM, Cisco, Siemens, Oracle, and NVIDIA, when I captured this chart today. The AIQ was trading at $21.34, just above its 20-day moving average, which is coming in a few cents lower. Now, at the beginning of the year, and I actually pretty much captured that on this chart, at the beginning of the year, look left, the AIQ was trading at 32. And then as you can see, it traded pretty much in a downtrend, had a little rally in March like everybody else, then came right back down and traded in, if there's anything good about it, it's a reasonably orderly, and I do like orderly, it's a reasonably orderly downtrend. Kept going down in July to around 21, then rallied back up in August, tried to make a move back up toward the 200, couldn't do it, then came down here, gapped down on the October 13th low at $18 and a penny, then gradually made a higher low here and started moving up to today's price, again trading it when I captured this chart at $21.34. What I like about this chart is that it's orderly. Now, if in the coming week, and I'll tell you what, if the QQQ moves up, artificial intelligence will no doubt go with it. If the Nasdaq, if tech stocks, momentum stocks roll back over, then the AIQ will go with it. So this is it's a little bottom fishing play here, but I'm not in any mood to lose a lot of money. So I'm gonna try it. If the stock doesn't behave, I'll get back out. And of course, again, that will have a lot to do with what the Nasdaq does and the QQQs. So in the coming week, if the AIQ, I'll give it a little room, if it can remain above the 50-day moving average, 50 days coming in at $20.04. If it can remain above the 50-day moving average, I will add a small position to my trading portfolio, and my initial stop is going to be at $19.90, and that's below the 50-day moving average. If and when the AIQ rises above the 200-day moving average at $22.23, that's where it is today. If and when it can move above the 200-day line, I will add to my position and trail my stop. So you might want to keep an eye on the AIQ in the coming week. Now, please know, if you'd like to become a more successful trader, go ahead and check out my trader training programs. You can choose from 10 different online trainings, like our flagship training, 7 Steps to Successful Trading. We have a really good one that's very popular, How to Swing Trade Successfully, Trade the Trend to Profits, How to Read Charts is great for beginners, 3 Winning Setups is awesome too, and Bottom Fish Like a Pro, which we are going to be using as and when this market says, okay, we're ready to go up, and we start bottom fishing even more. So these programs can help you increase your gains quickly and easily. I made them to that point. To see all of my online training programs, simply go to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.